Okay, I think most people are completely misunderstanding what BlackRock is actually doing here, because this is not just another crypto news story. This might actually be one of the clearest signs yet that Wall Street is testing blockchain-based financial infrastructure. And I think the most important part is not just that BlackRock launched this, it's why they chose Ethereum. BlackRock could have chosen a lot of different chains. And institutions usually optimize for security, reliability, stability, liquidity, and infrastructure, not hype. Now, let's simplify what this actually is, because most people hear the word tokenization and immediately get confused. So BUIDL is basically a tokenized money market fund. The underlying assets are still traditional assets, cash, US Treasury bills, and repurchased agreements. So this is not BlackRock's buying meme coins. This is traditional finance assets being connected to blockchain infrastructure. This is where Ethereum enters the picture. Investors subscribe through securities. BlackRock manages the fund. And then tokenized ownership shares are issued on Ethereum. That's the important distinction. Ethereum is functioning as the ownership layer, the settlement layer, and the transfer layer. That's a much bigger use case than speculation. Notice how institutional this entire structure still is. BlackRock, BNY Mellon, securities, custodies, transfer agents. So this is not decentralized finance replacing Wall Street overnight. This is Wall Street integrating blockchain rails into the existing financial system. Institutions may want the efficiency of blockchain without fully embracing decentralization. Here are the important disclosures. This is another really important section because it shows this system still has regulation, approved investors, compliance, restrictions, and centralized oversight, which again reinforces the idea that institutional blockchain adoption probably looks very different from what early crypto users imagined. The key takeaway. So the big takeaway here is blockchain is experimenting with tokenized ownership and blockchain settlement infrastructure, and Ethereum is the infrastructure layer underneath that experiment. Now let's go deeper into how Ethereum is actually being used in the ecosystem. What is BUIDL? This is probably the most important thing to understand. The treasury bills themselves are mostly off-chain. Ethereum is not literally storing treasury bills. Ethereum is storing the ownership representation of the fund. The assets are traditional. The ownership layer becomes programmable. BlackRock still buys traditional financial assets, cash, treasury bills, repo agreements. That part remains traditional finance. Ownership itself becomes tokenized on Ethereum. So instead of disconnected bank database updating ownership internally, ownership can now move on blockchain rails. How the process works. Investor subscribes through security markets. The fund receives US dollars from the investor. BlackRock invests in cash, US Treasury bills, and repo agreements. Tokenized shares, BUIDL tokens, are issued to the investor on Ethereum. Investors can transfer their tokens 24/7, 365 to other pre-approved investors. Investors earn daily accrued dividends paid monthly as tokens. On Ethereum, the following occurs. New BUIDL tokens are minted. Ownership transfers between investors. Tokens are burned when investors redeem. Transactions settle securely and transparently. Monthly dividends are distributed as new tokens. Ethereum starts looking less like a speculative crypto network and more like financial infrastructure. Ethereum provides final settlement, transparency, 24/7 availability, programmability, interoperability. Blockchain creates shared programmable infrastructure. This may be one of the strongest institutional validations Ethereum has received so far. How this could affect ETH's price. What is bullish over the long term? More tokenized assets on Ethereum equals more usage. More settlement activity equals more demand for block space. More ecosystem growth equals more demand for Ethereum. It strengthens Ethereum's credibility in institutional finance. Staking, collateral, and security demand could increase. Something to keep in mind, institutions may use layer 2s and batching. They may abstract complexity and not hold large amounts of ETH directly. Usage does not guarantee massive ETH price appreciation in the short term. But the relationship is not necessarily direct. Even if Ethereum becomes more useful it does not automatically mean ETH instantly explodes. The bigger shift may be legitimacy, not immediate price action. The bigger implication is traditional finance move on-chain, not replacing the system overnight, but integrating blockchain step by step. Efficiency without full decentralization. Institutions want the benefits of blockchain with the compliance and control. Tokenization is the next wave. Treasuries, funds, stocks, real estate, and more assets moving on-chain. If Ethereum remains the dominant settlement layer, its importance continues to grow, potentially moving onto blockchain rails. And if that happens, Ethereum becomes much more important structurally. The key takeaway: BlackRock didn't choose Ethereum for hype. They chose it for reliability, security, and scale, and programmable finance. This may not pump Ethereum tomorrow, but it could change where trillions of dollars get built in the future. And honestly, I think the real story here is not crypto speculation anymore. The real story may be Wall Street quietly rebuilding parts of the financial system on blockchain rails underneath the surface. This is not financial advice. I am not a financial advisor. I just generally find this stuff interesting because I think we're watching financial infrastructure evolving in real time. And honestly, I think most people are still underestimating how big tokenization and blockchain-based ownership systems could eventually become. If you enjoyed this video, subscribe if you want more deep dives like this, and let me know in the comments. Do you think Ethereum actually becomes major financial infrastructure? Or do you think this is all being overhyped?